US dollar gives up some of the gains from the previous session. Before we start, a quick word from our sponsor. This video is brought to you by XNets, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The euro has rallied ever so slightly during the early hours on Tuesday as we continue to hang around the 1.05 level, which of course is a large, round, psychologically significant figure. This is a market that I think continues to see a lot of sideways action just on top of what essentially has been a major floor the last couple of years. If we can turn around and rally from here, the 1.06 level above is a barrier. If we can break above the 1.06 level, then I think it allows the euro to lift towards the 50-day EMA. On the other hand, if we break down below here and reach the 1.04 level, then we could really start to fall apart. All things being equal, you need to keep in mind this is non-farm payroll week, so that'll have a major influence on the US dollar. The US dollar has drifted a little bit lower against the Japanese yen as we continue to see a lot of noise in this pair. That being said, it does look like we are at least in the midst of trying to form some type of bottom. Keep in mind the interest rate differential does favor the United States, but recently there's been a little bit of perhaps panic profit taking would be the best way to describe it. Ultimately, if we can break above the 200-day EMA and stay above there on a daily close, I think I'd be much more willing to put money to work in this pair. As far as shorting is concerned, I really don't have any interest right now. The Australian dollar has gone back and forth just below the crucial 0.65 level. The 0.65 level has acted like both support and resistance multiple times over the course of the last year or so. And I think ultimately you've got a situation where traders will continue to look at this region as a bottom of the market. If we were to break down below the 0.6450 level, though, that could open up even deeper selling. Keep in mind the risk appetite will have a major influence on what happens here. But as things stand right now, it still looks very much like a fade the rally at the first signs of exhaustion type of market. My name's Christopher Lewis. I work for FXEmpire. If you enjoyed the video, give me a thumbs up and make sure to subscribe to our channel for more analysis.